one fund. On point for today, the expert to talk about it. This is the ETF of the week. Welcome to the ETF of the week, where we get the latest take from Todd Rosenbluth, the head of research at VettaFi. And if you go to VettaFi.com, you'll find all the tools you need to be a savvier, smarter ETF investor and to get more details on the new, newsworthy, trending, and timely ETFs that we discuss here. And speaking of timely, well, VettaFi is the organizer of Exchange. It's the largest ETF conference geared towards financial advisors, and it's being held March 23rd through March 26th in Las Vegas. You can still get in on it, so stay tuned after Todd and I finish up here for a small message with more information about Exchange. Todd Rosenbluth, it's great to chat with you again.
It's great to be back.
Your ETF of the week is
the Vanguard 0 to 3 month Treasury Bill ETF, VBIL, VBIL.
VBIL, the Vanguard 0 to 3 month Treasury Bill ETF. Now, Todd, 0 to 3 month Treasury bills, about as unexciting, about as boring as it gets. But right about now, the market is anything but boring. So is this the, what do you do when the market gets crazy? You hunker down. Is this the hunker down ETF of the week?
This is an example of the just stay calm, be patient, and ride this out until hopefully things get better for the stock market. And so you and I are recording this when it's back-to-back days of significant sell-offs in the equity markets. There's been a flight to quality, a flight to safety. That's exactly what this ETF VBIL offers, and it's new. So Vanguard doesn't launch a lot of ETFs, so we at VettaFi take notice when they do. This ETF launched at the end of January, so it's new. It doesn't have a long track record, but it owns ultra-short treasury bills. So I think we can better understand what this holds. And it's just 7 basis points. So at the time that we're recording this, this is the cheapest way to get short-term treasury bill exposure through the ETF structure.
This is a parking space, basically, until people feel better, or this is an investment choice to you?
So it's yielding 4% right now. So that's okay. And it's not clear if the Fed is going to be cutting interest rates. And if how much they're going to be, there's still a lot of debate. So this, you can reduce your interest rate sensitivity. You can use this as a safe haven and for short-term purposes. And for folks that don't want to just have cash on the sidelines, they've moved their money into an ETF strategy, and a strategy that has multiple ETFs. This gives you that same benefits and liquidity that an ETF structure has. I know many investors in their asset allocation strategy have a slug of cash or cash equivalents. That's what we can think of with VBIL. At just 7 basis points, it's not draining your portfolio from a fee standpoint the way that actually many money market funds do. They're much more expensive than this. This is like a tad riskier, I guess, than a money market fund because it can move off of that NAV. The net asset value can adjust a little bit. So this could be either a strategic position and stay within your portfolio and asset allocation, or if you are nervous about the equity markets and you're looking for a place to park, VBIL can be a good alternative for you.
It's important that if you're looking at it as a parking space, you're considering all the alternatives, because the 4% yield is good, but that's also what the top high yield savings accounts in this country are earning right now. That's also what you can get from the top money market funds. Money market funds, you might be getting it with additional expenses. And if rates move, you're more likely to see a cut. But you also have check writing features. And of course, internet savings banks, well, you get FDIC insurance. Are you at all, I mean, obviously ETFs are your book. So for you, is it, I like the ETF side of things better, or is it, you know what, you need to have an option, here's the ETF option, and then make the decision that works best with your life?
Yeah, so I'm not, obviously, this is the ETF of the week segment of your show, and I work for a company that has commentary and research on ETFs and other asset classes. We don't offer an opinion on a savings account or CDs or anything like that. So this is the ETF, or this is an example of an ETF for folks that are moving their money increasingly towards ETFs. And what we've seen in January and February and the first week of March is that this ultra short category of fixed income ETFs has been very popular. With an ETF, you get liquidity to be able to make moves intraday, unlike you might with a mutual fund. This is a great vehicle. Many folks have embraced ETFs. VBIL is a new entrant into the space. There's iShares and State Street products that have larger asset bases. VBIL is new, and VBIL has a lower expense ratio. So that's why we're spotlighting this ETF.
Ease of moving in and out is particularly important for a lot of investors. Is this also a case that because it's got multiple uses and because you might be using it because you're nervous, that this is not the standard, okay, it's a bond fund, so take your fixed income money and put it here. This, again, if it's a parking place, it's whatever you're taking the cash from, this is where you're parking it until it does the next thing. So it's not so much about where the money's coming from. It's really about where's the money going next.
Well, I think it's a partial where the money's coming from. So if you wanted to reduce the risk of your fixed income allocation and you have core intermediate term bonds, this can be a way of reducing that risk profile by adding VBIL into that. If you have been overweighted towards equities and you're now, or maybe you're not as overweighted as you were 2, 3, 4 days ago as we're recording this because the market is sold off, you're realizing, you know what, maybe I don't want to have as much in the equity markets, and let me move some of that into a cash-like, not cash, but a cash-like short-term fixed income product. It can certainly go there. Economic environment settles, investors become more confident in the outlook for the earnings picture going forward, then this could be just a short-term, pun unintended, position for folks. So there's lots of different use cases for this. If this is strategic, you can have this on. If this is tactical, you might be moving out of this much faster.
But it's a very interesting play and a play that a lot of folks might want to know about in times like these. It is the Vanguard 0 to 3 month Treasury Bill ETF, VBIL, just issued at the start of the year, and now the ETF of the week from Todd Rosenbluth at VettaFi. Todd, great stuff. We'll see you again next week.
I'll see you next week, Chuck.
The ETF of the week is a joint production of VettaFi and Moneylife with Chuck Jaffe. And I am Chuck Jaffe, and I'd love it if you check out my hour-long weekday show by going to MoneyLifeShow.com or just find us wherever you find your favorite podcasts. Now, if you're searching for information on your favorite ETFs or maybe what could be your next favorite ETF, look no further than VettaFi.com, where they've got all the tools you need to get the information you're looking for. They're on X at Vetta_Fi, and Todd Rosenbluth, their head of research, my guest on ETF of the week, he's on X too, at Todd Rosenbluth. The ETF of the week is here for you every Thursday. Make sure you don't miss an episode by signing up, following along on your favorite podcast app. We'll see you again next week with another new ETF to talk about. Till then, happy investing, everybody.
Stuck in the same patterns and routines? Trying to take your practice to the next level? You need to register for the Exchange Conference. In March 2025, industry experts will be gathering in Las Vegas to share actionable information, network, and learn the latest innovations in practice management. Invest in your greatest asset, yourself, by registering at exchangeetf.com today.